So in this video we are going to learn about hire purchase and installment purchase system. Okay, hire purchase installment purchase system. Okay, so this will come in advanced accounting, hire purchase and installment purchase system, question and answer. Okay, here House of Accounts is my channel. Please subscribe for more video where you can get all other accounting videos also. Okay, so let's see some theory about the hire purchase and installment purchase system. Okay, so I'm making some huge for okay, here is the theory for hire purchase and installment purchase system. So it's a small view, so let's make it some larger. Okay, now we can see clearly all the definition. Hire purchase, first start the hire purchase. It's very in easy term we can learn hire purchase, no need to go for a high stance words. Okay, it is a credit purchase. The price under hire purchase system is paid. Okay, it is a credit purchase. The price under hire purchase system is paid in installments. The goods are delivered in the possession of the purchaser at the time of commencement. Okay, at the time of commencement, good is delivered to purchaser according to the agreement. Okay, so immediately goods delivered to purchaser, but hire vendor continues to be the owner of the goods till the payment of last installment. Okay, but installment purchase system is very easy. In is installment purchase system is a system of purchase, okay, and sale of goods. Okay, so it is easier than hire purchase. Installment purchase system is a system of purchase and sale of goods in which the title of goods is immediately transferred to the purchaser at the time of sale of the goods. In hire purchase it will transfer at the end, but in installment purchase it is transferred at the time of delivery only. Okay, it is paid in installment. The sale price can be paid in installment, but in case of installment purchase system, the third party gets a better title on the goods purchase. Okay, now let's start the problem, how we can solve the hire purchase problem. Here is the problem, the first problem for long questions. Okay, the Madras Transport Company purchased motor car from Bombay Motor Company. Okay, from Bombay Motor Company. Madras Transport is a hire purchaser, Bombay Motor is a hire vendor. On hire purchase agreement 1st January 2003, paying cash 10,000 as a down payment. Okay, and agreeing to pay further reinstallment of 10,000 each on 31st December each year. The cash price 37,250. Okay, and the Bombay Motor Company means vendor charge 5% per annum as interest. The Madras Transport Company means purchasing company write off 10% depreciation on the reducing installment method. Okay, generalize these transactions in the books of both the parties. I am just showing here ledgers in the books of purchaser only. Okay, ledger in the books of purchaser only. So the opposite the same way, only column should be forward opposites. Okay, you can try write ledger in the books of seller also, means whatever things I'm writing in debit side, you just transfer it to the credit side, or what are the entries on credit side, you can transfer it to the debit side. Okay, so here ledger in the books of purchaser. Okay, ledger in the books of purchases. First what we have to do, we have to do some ledgers here. Okay, we can go for working note first. It's very easy to go for working note, okay, but motor account is also very easy. We just have to calculate here. Let's see, the 1st January 2003 is the starting year, and 37,250 is the cash price, and 10% is a depreciation. So motor account, we just need to take depreciation, okay, we just need to deduct the depreciation only, so it is real easy. So before working out, I'll show you here. 1st January 2003 to vendor, we have to write, okay, then 37,250, then go for 31st December 2003, okay, 37,250 into 10% depreciation, how much you will get? You will get 3,725, okay, 3,725. Now we have to check the balance carried on amount, okay, so we can see by calculating also. I'm showing here how to calculate. 37,250 into 10% means 3, okay, a deduction amount, so I'm showing here, okay, the balance amount we are getting 3,525. Now the tally the ledger, 37,250 and 37,250, okay, so we are getting 33,525 after deducting 3,725 from 37,250. Now let's start for the next year. So next year, 1st January 2004, okay, two balance brought down for second year. What are the balance? 33,250 or 525, right here 33,525. Now you are 31st December 2004 only. Depreciation we have to calculate, okay, 33,525 into 10% means 3,352. We can also write 353, but if you want, you can write even 352 also, okay, it's your choice. You can write 353, 352, okay, so I'm writing here 352, okay. So now we have to calculate the balance brought down amount. 3,352 deduct from 33,525. Now we are getting 30,173 is a balance carried down, and this balance we need to transfer for next year. So write ledger, tally the ledger 33,525. Now let's go for third year, okay, 1st January 2005. I have already prepared performa here, so I'm just modifying this. So right here balance carried down amount, so two balance brought down for this year 30,173, okay. Now 31st December 2005, we have to calculate depreciation here for 2005, and depreciation is a 10%, 30,173 into 10%, so 3,017 we will get, okay. Now write balance by balance carried down amount, so deduct 3,117 from 30,173. See here in calculator I'm doing here, so we are getting 27,156. How much? 27,156. Now tally the ledger, 30,173, 30,173. This is the final balance. So we can transfer these balance carried on for the next year also, but here just tally the ledger, it's okay, okay. So this is how we can prepare motor car account. Now let's do the working note. Working note is also very easy, okay. See the working note. Let's see the first question. Cash price 37,250, down payment 10,000, and installment is 10,000 each. Interest charges 5%. Just we need this information only. So let's go for working note. Right here 37,250 is a cash price. Now write down payment 10,000. Okay, so write the down payment. We have to pay 37,250 to owner, so immediately we have paid 10,000 as a down payment. So right here 10,000. So now we are getting 27,250 balance. This balance we have to pay to the seller. So now first add the interest. With this balance we have to give interest also for first year. First we have to interest, then installment. After adding interest we have to take the installment. 27,250 into 5%. Let's calculate on calculation on calculator. Let's see, 1362, or you can write 1363 also, because 0.5 is there. So 1363. Now after adding the depreciation we are getting 28,613. So now pay the installment. The first installment is 10,000. Okay, so 10,000. After deducting 10,000 we are getting 18,613. How much? 18,613. Now calculate the interest for second year. Okay, for second year take 18,613 into 5%. On this amount we have to pay the interest. See on calculator also I'm showing here 18,613 into 5%. Okay, so how much we are getting? 931. Okay, now add. So we are getting 19,544. Now pay the installment, second installment 10,000. After getting second installment, deducting second installment, we are getting 9,544 balance. We have to pay the remaining balance. So now add interest. Here you no need to calculate into 5%. Directly you can see, directly you can deduct from 10,000. Okay, because it is the last. So 10,000 minus 9,544. So we are getting 456. So I'm showing here on calculator also 10,000 minus 9,554. So 456 we are getting. How much? 456. Then add, it's 10,000. So now pay the third installment 10,000. So after paying 10,000, now the overall balance we have to pay to seller is 0. So we have completely paid the overall amounts. Now let's see the vendor account. So motor account already we have prepared. See, 1,363, 931 and 456. 3-year interest we have got same as same. Now let's go for vendor account. Here credit, what we have to write how much amount we have to pay for machine and interest. Debit side, how much amount we have already paid. We have, it's come in debit side. Paid amount on debit side. Okay, payable amount on credit side. Look here, how much we have to pay. It's a Bombay motor company. Vendor, who is a vendor? Bombay Motor. So right here Bombay Motor Company. Vendor means seller. Machine, how much? It's not a machine, it's car here, motor car. So 37,000. So 37,250 is the value of the car. Interest, we know already, first interest 1,363 as the interest. So we remember 931 is the second year, 456 for third year. So I'm showing here 1,363. Okay, now go for total amount, add interest plus payable amount. It's overall 38,613. Now right here, down payment, how much we have paid. First change the dates. Here 2003, started from 2003, and here immediate we have paid the down payment, so it is in January only. So 10,000 we have paid so far. Now pay the first installment we have paid 31st December 2003, and that is also 10,000. So now right from 38,000 we have paid 20,000, means 18,613 is the balance carried down amount. This balance will be okay. Now write the total ledger balance, and this balance 18,613 carried down amount we have to transfer to this. Okay, we have to transfer for the next year. 1st January 2004, buy balance brought down 18,613. Now write interest for second year 931. Here you can see from working note 931 is the second year interest. So after adding 931 to 18,613, we are getting the amount 19,544. So pay the second installment, change this date 31st December 2004. Okay, 10,000 second installment. So after from 19,544, after deducting 10,000, we are getting 9,544. So tally the ledger balance 19,544 overall. Okay, this 9,544. Okay, first change. I'm changing a date. 1st January 2005. So we have brought down the amount of last year 9,544. Okay, so third year interest is 456. We already know 456, so the total amount is 10,000. Now pay the third installment, that is 10,000. First change the date 31st December 2005. Now pay the third installment 10,000. So balance carried on is totally nil. Now write the total ledger balance 10,000. So this is how we can prepare vendor account, first year, second year, and third year. Okay, so now go for interest account. We have to prepare interest accounts. So let's make it large so we can see easily. So interest account, here two interest suspense accounts, debit and credit side by P&L. Okay, so right, first January 2003, two interest suspense account. We know the interest 1,363. Okay, 1,363. So right, 31st December 2003, by P&L 1,363. This is the first year interest. Now go for second year interest. 1st January 2004, into interest suspense accounts 931. 31st December 2004, by P&L 931 is the interest. So now next year 31st January 2005, two interest suspense accounts 456. 31st December 2005, by P&L 456 is the interest. This is how we have to prepare interest account. No need to calculate the total amount and something, only just put the amount. Here you can see 931. Okay, this is the interest account, this is vendor account. Okay, here it is a motor car account or motor account. This is the question number first we have solved. Okay, so it's very easy to solve the hire purchase. Don't worry, don't take tensions. Okay, so here is a house of accounts. So you can find more videos, go to the playlist.